From Elon Musk himself, talking about this idea that, price cuts, he would not rule out continuing to bring pricing down. He specifically was citing interest rates. I think rather than that being a factor in China, it's more a factor of just, the amount of competition in that market, how competitive it is, how crowded it is, and how much the Chinese manufacturers in particular have really proven strong. I think BYD in particular is really bringing up an awful lot of volume and creating a lot of competitive pressure for Tesla to have to answer.
Right.
Tesla investor Tom Nash has just discovered what Tesla investors should be looking out for this time when investing in Tesla stock, and when it is selling at a rather low price too. Tom Nash mentioned that in choosing a company to invest in, investors should actually look out for companies with good businesses. You see, most investors usually move with the tide. When Tesla stock price is high, they buy shares and become more bullish on the company. And when the price falls, they start selling their shares and no longer believe in Tesla's potential. According to Tom Nash, this is not the best way to invest. Instead, investing should take into account a company's fundamentals. This way, irrespective of what the stock sells for, you're sure of making a profit at the end of the day.
Is this a surprise that we see more price cutting from Tesla in China?
Yeah, we may have thought that we were done in China. You mentioned off the top sort of signs of abating. We even had a sort of curious announcement of an agreement among manufacturers to kind of call a truce, and that lasted all of a couple of days. I think what we learned in the sort of following weeks was, from Elon Musk himself talking about this idea that, price cuts, he would not rule out continuing to bring pricing down. He specifically was citing interest rates. I think rather than that being a factor in China, it's more a factor of just, the amount of competition in that market, how competitive it is, how crowded it is, and how much the Chinese manufacturers in particular have really proven strong. I think BYD in particular is really bringing up an awful lot of volume and creating a lot of competitive pressure for Tesla to have to answer.
Right. It's really interesting to look at the way that the competitive pressure is the same and also different in different geographies. So why is there so much pricing pressure from this competitive environment then in China?
I think we're seeing a pattern of sort of, as costs come down, as input costs come down. We saw the last couple of years, not only the semiconductor crisis putting some pressure on companies, but also raw materials for batteries. So lithium and nickel prices in particular really being a difficult challenge for these companies to work through. Those prices have come back down. We've seen, with China having this huge lead in terms of getting a battery supply chain up and running, we tend to see, as prices come down, China, price is able to come down first. And so perhaps we see that spread to other markets.
Tom Nash has previously disclosed that in the next 5 years, Tesla stock could actually be worth around $1,420.11. His recent valuation is based on Tesla's revenue, which has evidently been growing massively. His prediction was also based on the comment of Tesla bull and a well-known Tesla analyst, Gary Black, who predicted a $370 price target for Tesla over a 6 to 12 month period. According to the Tesla bull, there are several reasons and potential catalysts needed for Tesla to reach this price in the stated period, all of which are the important fundamentals that Tesla investors should be considering instead of focusing on the present noise in the stock market. Hey guys, welcome back to Tesla Tomorrow. Tesla explained its pricing strategy in a previous shareholder letter, stating that its near-term pricing strategy considers a long-term view on per-vehicle profitability, given the potential lifetime value of Tesla vehicles through autonomy, supercharging, connectivity, and service. According to the automaker, it expects that it's producing products and pricing for them will continue to evolve, upwards or downwards depending on the number of factors. Tesla said once overall revenue in the first 3 months of the year rose to $23.3 billion, up 24% from a year ago as car sales increased. On a conference call discussing Tesla's earnings results, Musk said that he thought pursuing increased sales with lower profits was the right choice for Tesla. Musk told investors that Tesla stands out among electric car makers for its profitability, adding that over the long term, profits would remain strong. Elon Musk also noted that Tesla's bottom line could be boosted after cars are sold using ongoing subscription payments for supercharging, self-driving, and other features. While investors continue to worry about margins, we think that there are other things you should be considering. But what are those things? Let's find out. But before we do, if you like this type of content, hit that like button, subscribe to our channel, and turn on notifications to stay up to date on everything happening with Tesla. David Traynor, founder and CEO of investment research firm New Constructs, once said that using the most realistic projections, like of sales and earnings, is the best way to predict a company's worth. And this is very true. Tesla's margins have proven that it's not just a car company, but also a tech company that will set the pace of self-driving vehicles and produce the next generation batteries that its rivals will rely on. Remember that despite the flood of new, mostly bargain-priced models issued by every big competitor, this will not significantly lower Tesla's profitability going forward. In terms of profit, Tesla is still laying the groundwork and expects that the firm's profits should remain strong, amongst the highest in the industry even. According to Elon Musk, it's better for Tesla to ship a large number of cars at a lower margin and subsequently harvest that margin in the future. Tesla already has some advantages over rivals. It's got a self-established large EV production footprint, with 4 plants globally, while many competitors are still building their capacities up. Tesla cars are also doing very well in their own markets. According to Tesla, the Model Y was the best-selling passenger vehicle on Earth in the first quarter of the year. The Model Y was the best-selling non-pickup truck in the USA in the first quarter, and the best-selling SUV in China in the first quarter, and also the best-selling vehicle of any kind in Europe in the first quarter. With Tesla's production and sales expected to grow throughout the year, it'll be tough for any other automaker to beat the Tesla Model series. The Model Y has consistently been at the top of sales in the 3 biggest automobile markets in the world, and this has led the Model Y to climb 3 spots to go number 1 globally, with more than 263,000 sales to open the year. According to a recent report by Worm Capital researcher Cameron Tierney and partner Eric Markowitz, Tesla is likely to dominate the S&P 500 by 2030. This report claimed that Tesla's competitive edge, coming from advances in AI, makes it a serious contender in the industry. It's also centered on a multi-year study conducted on Tesla's various business sectors, all of which have grown as a result of the ever-expanding car company. The report concluded that Tesla is aiming at controlling and reinventing its own components, tools, and factories to suit its needs. We expect Tesla's growth to help it achieve a compound annual growth rate of 50% by 2030. With net income and free cash flow growth accelerating in the coming years, and expanding margin profile to accompany its revenue growth. Tesla has several benefits that other car companies like Rivian, Lucid, and NIO will require years of consistently high revenue features to enjoy. The car company has the infrastructure needed to succeed in the EV industry. It also has the best supercharging network globally, which puts it ahead of so many other EV companies. Aside from Tom Nash, several analysts also expect that Tesla shares will be significantly higher than they currently are, especially since there's a massive transition to electric cars. First billionaire investor and Tesla bull Ron Barron once said that he expects Tesla shares to continue to skyrocket for the next 10 years, and that not even all. He believes that Tesla investors are going to make up to 5 times their investment in Tesla in the near future, predicting Tesla to be a $1 trillion company by 2030. Similarly, ARK Invest CEO Cathie Wood also considers Tesla as a very lucrative investment opportunity, especially when the issue of disruptive innovation is considered. What Tesla stock fundamentals do you think investors should be focused on right now? Let us know in the comments section, and don't forget to let us know what your valuation of Tesla is. If you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.